What if buying a house in Canada is now the worst financial decision you can make? For decades, we've been told homeownership is the path to wealth. But with prices at 13 times average income and interest rates exposing the true cost of debt, that story is broken. Here's the reality. Buying a house today is not investing, it's consumption. When you buy a $750,000 house with a $150,000 down payment, you borrow $600,000 at 5.5%. Your monthly mortgage is $3,600. Add taxes, insurance, and maintenance, and you're spending over $50,000 a year on an asset that produces zero income. Now compare that to renting the same house for $3,000 a month. With the $150,000 down payment you didn't spend, you could invest $1,250 monthly in stocks at 7% return. After 10 years, that grows to $225,000. The homeowner has paid $500,000 in housing costs and still owes $450,000 on their mortgage. Even with modest price appreciation, the renter who invested the difference often comes out ahead. Leverage sounds great. Control a $750,000 asset with just $150,000 down. But when prices stagnate, as they have in Toronto and Vancouver for years, homeowners lose while renters simply walk away. Since 2017, Canadian house prices are up 40%. The S&P 500 is up 140%. Millions have spent their prime earning years paying mortgages on assets that underperformed the stock market. Here's what actually builds wealth. Spend no more than 25% of your income on shelter, rent if it's cheaper than owning. Take every dollar saved and invest it in the stock market. The difference between a $4,000 mortgage payment and $2,500 rent is $18,000 a year. Invested consistently at 7%, that becomes $1.1 million over 30 years. Home ownership made sense when prices were reasonable and rates were falling. Today, with record debt and supply shortages, the math has changed. Renting isn't throwing money away. It's buying freedom to invest in assets that actually grow wealth. The real path to financial independence isn't speculating on houses. It's spending less than you earn, investing the difference in productive assets, and staying unencumbered by debt. Ask yourself, which is smarter, paying rent while building a portfolio that compounds for decades, or paying twice as much monthly to slowly pay down a depreciating asset? The numbers don't lie. In today's market, renting strategically and investing the difference beats homeownership.